Anandi Software welcomes you to the presentation of CMSV plus CMA data software. It is one of the important software among the 4 software packages of ifprsv plus series, a complete project finance software series. This presentation is related to use of the CMA data software in non-interlink mode only when interlink no data input is required and CMA data is prepared all on its own. File management. This first screen is a file management screen. It has a very simple and effective file functions for various files handling. You may work for any number of files with no restrictions. We select a particular file to work upon from among the various files. It is fully symbolic software, much easier and convenient to operate and use. These are 8 screens within which you are having full-fledged and complete facilities for all detailed calculation and workings for framing up of P&L account and balance sheet independently and all on its own. Next 3 screens are related to detailed appraisal analysis, A. Vouching and verifying profitability, B. Extensive working capital analysis, C. Detailed insight into and analysis of balance sheet. This screen is all about the general parameters. Software is in 3 plus 10-year format, 3-year actuals and 10-year projections, and any combination there too. It may be 1 plus 7, 2 plus 5, 3 plus 6, etc. Enter the name of company, current year which is first year of projection, category as proposed or existing. Also state therein denomination choice and constitution. Then first 3 are operating statement screens and are meant for framing of P&L account. First is related to revenue and income. Second for all operating expenses and overheads. And third is for interest charges and tax on profit. It is important to note that it is always preferable and advisable to put in the actual of last 3 years, and once input of last 3 years are given, then software will be providing clue and guide as to its trend, pattern and behavior as evidence in the past during last 3 years. As for all income elements, all cost elements, all periodicity and stocking structure of current assets, and as well for current liabilities. And this provides a lot of convenience, support and comfort in working out estimates and projections. Now we have a look as to how independently it could frame P&L account as related to material and operating expenses and overheads. Firstly, we get a look to main material cost. If we opt calculate mode years, then initially we will get a reference on its past status and find out its behavior during past 3 years. We could observe that it is ranging somewhere nearing 68% to net sale value of output, and we safely project it at 68% or so, and which you could vary also each year wise. Further, the imported content also we could specify separately as for each year. As we exit the screen, you will find all calculation placed therein. For example, now we change the calculate mode to no and straight insert some figures there too as 20, 30, 40, 50 for imported raw material and as 50, 75, 100, 125 for indigenous raw material. Again, we change to calculate mode years and state it as 68% to net sale value of output as evidence during the last 3 years. You could observe as we exit the screen, all calculations are changed and placed therein. Getting moving ahead to packing material or other material cost. We could see here that it is ranging to somewhere nearing 3% in reference to raw material cost, 2.10% in reference to net sale value of output, 2.15% to net sale value, etc. As under the first option, we will choose the appropriate option as among these four and soon complete the input. Under the second option, it will be referred to as percentage to raw material or main material cost. As under last option, we can state it as percentage increase over specified amount as separately for each year. As we exit this screen, all calculations are placed in the main screen. In the same way, in calculate mode years, you could conveniently work out other cost elements as consumables, employees cost, power and fuel cost, royalty and other charges, repairs and maintenance, other manufacturing expenses, administrative and general overhead, selling and distribution expenses, etc. As a major aspect in the running mode, with data entry at each field, it would be showing you the resultant GP and EBITDA as amount and percentage along with actuals, enabling you to vouch and verify the reasonability and acceptance of profitability. Now we have a look to A. Calculating of WIP and finished goods stocks, B. Calculating of all type of stocks, inventories, receivables, advance to suppliers, etc. C. Calculating of all type of sundry creditors, advance from customers, etc. It has been made highly simplified and easy. A. Calculating of WIP and finished goods stocks. As we get into the screen, we are made known of the holding structure of WIP and finished goods stocks as evidenced during the past 3 years. Taking a clue here from, just enter the holding period intended for WIP and finished goods stocks, and you have the flexibility of adopting varying holding structure for first year of projection, that is current year, second year, that is next year, and third year as following year onwards. As you exit the screen, you will find all the workings placed getting stocks of WIP and finished goods for all the years. B. Calculating of all type of stocks, inventories, receivables, advance to suppliers, etc. We switch over to current assets screen. Here also we are made known of the holding structure of each category of current assets during the past 3 years. Say, it could be observed that raw material holding is in the range of 2.5 months, receivable as around 3 months. Same way, find here past holding structure of other materials, packing materials, consumables, advance to suppliers, current expenses, etc. Taking a clue here from, just enter the holding period intended for each category of current assets with the flexibility of adopting varying holding structure for first year of projection, that is current year, second year, that is next year, and third year as following year onwards. As you exit this screen, you will find all the working placed getting it separately for each category of current assets. Calculating of all type of sundry creditors, advance from customers, outstanding expenses, etc. Same way, we get a clue from, as evidenced during last 3 years, as for various level of sundry creditors, advance from customers, outstanding expenses, etc. And then just state therein the term credit period intended for first year, second year, and third year onwards. Upon exit, get auto-placed all calculations therein. Very importantly, As for all the three above calculations, workings are fully auto and inbuilt as for A. Value of stocks of WIP and finished goods, B. All other stocks and inventories, C. Domestic and export receivables, D. Advance to suppliers, E. Sundry creditors, F. Advance from customers, G. Current expenses, etc. And importantly, it will get adapted and adjusted all on its own at any point of time as you change any of its relative component, say sales, raw material cost, other material cost, change in cost of utilities, manufacturing overheads, etc. As under calculate mode no, you are holding all calculations and you could place straight the figures at all places. Furthermore, it provides for more than sufficient 6 user-defined category of current assets and other current liabilities. Additionally, you could also separately specify investment in government securities, FD, etc. as current assets and statutory liabilities, income tax payable, dividend payable, etc. as in current liabilities screen. Importantly, in a running mode, with data entry at each field, it would be showing the resultant current ratio, enabling you to correct it further as may be required. Now, as for all time period cost, we shall have a simultaneous look to the framing of both P&L account and balance sheet. Interest on term loans. As under calculate mode yes, you could define any number of term loan as under both existing and proposed category. Importantly, there are no volume restrictions. You could conveniently define different and distinct terms of finance for each of the term loan being defined here. As for stating of terms of borrowings, select the term loan from the drop-down box. State the basis of interest calculation as quarterly, half-yearly, monthly or yearly. Rate of interest as general and initial, providing for interest concession, interest waiver, differential interest, etc. Repayment choice as even repayment or specified repayments. As under even repayment, state the repayment period as the case may be, say 6 years. Repayment basis as quarterly, half-yearly, monthly, yearly. And then state the moratorium, stating the repayment starting point, say 6 months moratorium with starting point of repayment as year 1 and month 6. Say 1 year moratorium, then starting point as year 2 and month 1. It just asks the raw and basic data for workings. Besides, you have a quite good freedom to state the specified repayment each month wise over the next 10 years as a great suitability for uneven, erratic, bullet repayment. Thus, you could see that how simpler but how precise and exact with lot of flexibility you could state interest and repayment for all and each defined term loan. Then we may have an overview for equated loans. The same way, no restrictions here. You may define all your existing and proposed NBFC and equated loans. Equated loans need not necessarily be monthly, but your equated installments could be bi-monthly, quarterly, half-yearly or yearly. Furthermore, it need not to be a single EMI structure. It may be differing EMI over different period. Instead of 18,000 for 5 years, it may be 18,000 for first 3 years and then increasing to 19,000 for next 6 months and then decreasing to 17,000 for next 1 year and 6 months. You could very effectively place consideration in first year, moratorium period, PEMI interest working, etc. Same way, You could work out for debenture and bonds and all unsecured deposits and loans. As for all the four above, it will be fully auto and inbuilt and would set the following calculations all on its own. A. Interest charges on your various loans and borrowings in P&L account. B. Repayment due and payable within next 12 months as current liabilities in balance sheet. C. Repayment due beyond next 12 months as term liabilities in balance sheet. Now, just we switch over to borrowing screen to find out how repayment are being auto placed therein as due within next 12 months and outstanding beyond 12 months. Or else, complete flexibility of giving your specified amount at every place under calculate mode no. We switch back to third operating screen for interest on working capital. If you want precise and exact working, you opt calculate mode as yes. It could work out interest charges as separately as for BPBD facility, hypothecation limit, export limits, etc. with specifying separate interest rate and utilization for each limit for each year. Simultaneously, the limit sought for is getting carried over as current liabilities in balance sheet. We are going back to second screen for detailing of depreciation calculations. Under calculate mode yes, it provides for 16 user-defined categories of depreciable fixed assets. You may adapt it as required. As for depreciation workings, specify the assets value of existing fixed assets either as gross block or net block, and also give breakup of existing depreciation fund. Further, specify the addition thereto for each category under the proposed column. In the third screen, you are enabled to choose the depreciation method, depreciation rate, and part consideration as especially and separately for each category, and it is not just overall. Thus, you could know that how precise and exact you are getting auto-calculated the following relative aspects. A. Depreciation charges as for each year as separately for P&L and IT purposes. B. Gross block of fixed assets as to be shown in balance sheet. C. Depreciation till date as to be carried over to balance sheet. And net block of fixed assets. Just we move to fixed assets screen to look into the figures placed as of gross block, depreciation fund and net block. Now we have a look to all intangible assets like P&P expenses, technical know-how fees, developmental expenses, etc. You may opt to write off in percentage term to intangible assets value or as year specified amount, where simultaneously it indicates the max amount that could be written off. As for all the three above, it would be fully inbuilt and is set for following calculations. A. Amount to be written off as for each year separately. B. Carry forward balances as to be carried over to balance sheet. Tax on profits. You may just enter the tax on profit figures for each year as desired. Or under calculate mode yes, opt for detailed calculation of it. There are two options. A. Detailed tax working with consideration of tax holiday, losses carry forward, applicable sections, user-defined deductions, etc. And tax calculated as per respective slab and rates as per the selected constitution. B. Tax on profit to be worked out at specified tax rate and surcharge on PBT. It provides for IT slabs and rates as per different constitution, and it could be adapted and set as default at any point of time. As a major aspect, in a running mode with data entry at each field, it would be showing the resultant PBT, PAT and cash accruals as amount and percentage along with actuals, enabling you to vouch and verify the reasonability and acceptance of each of the profitability index. Further, moving ahead to other aspects as for framing of balance sheet. We had seen earlier this current assets and current liability screen. Looking to borrowing and non-current liability screen. As seen under the calculate mode, yes, the above part, it is all getting auto-calculated and placed over here. A. Repayment due and payable within next 12 months as a part of current liabilities. B. Repayment due and payable beyond next 12 months as term liabilities. Or else, you have the complete flexibility of giving your specified amount for each under non-calculate mode. Furthermore, it provides for more than sufficient 5 user-defined category of non-current liabilities which could be conveniently adapted and adjusted by you as required. As an important feature, here also in a running mode with data entry at each field, it would be showing the resultant TOL, TNW, both non-quasi and quasi, enabling you to correct it further as may be required. Coming over to the net worth screen. In working out net worth, it displays here the profit of each year as worked out in operating statement and further provides the facilities for addition to capital, dividend drawings, withdrawals, etc. and then arrive at the resultant amount as shown here. Furthermore, it provides for more than sufficient 5 user-defined category of miscellaneous and other reserves and surplus which could be conveniently adapted by you as required. For example, say cash subsidy, other contribution, general reserves, miscellaneous surplus, etc. The same way like borrowing screen, here also in a running mode with data entry at each field, it will be showing the resultant TOL, TNW, both non-quasi and quasi, and this would enable you to correct and improve upon further as may be required. Last screen, as for framing of balance sheet, is that of fixed assets, intangible and non-current assets. As under calculate mode, we had seen that in depreciation working screen, depreciation charges, gross block, cumulative depreciation and net block are all getting auto-calculated and accordingly A. Gross block, B. Cumulative depreciation till date, C. Net block are getting placed here all on its own. Or else you have the complete flexibility of giving your specified amount for each under non-calculate mode. Same way, all intangible assets balance is not written off are getting carried over all on its own. Furthermore, it provides for more than sufficient 5 user-defined categories of miscellaneous and other non-current assets, 3 categories for investment, etc., and which could be conveniently adapted by you as required. For example, say advance for capital goods, receivables greater than 6 months, etc. Find that this software is very simple and easy to use. Further, all this is coupled with lot of convenience and ease of workings being A. All calculations, B. All CMA data reports, C. 3 pages detailed appraisal analysis are well placed and very importantly all in the same screen itself with no traversing around at all. To have a look to these aspects, we move to current asset screen. You need not to generate reports and while remaining in the screen itself for input, A. You are getting all current assets worked out and displayed. B. You could view all your CMA data reports, say form 2, 3, etc. C. Getting 3 pages instant and quite detailed appraisal analysis as separately for vouching and verifying the profitability, extensive working capital analysis, and detailed insight into an analysis of balance sheet. All this you find while doing the input in the same screen itself and no need to traverse around. I can say it is a very sure and effective way of preparing CMA reports with lot of flexibility and adaptability as for framing of operating statement and balance sheet in 3 plus 10 year format. Further, the CMA data software as an independent and standalone software can be converted into full-fledged project finance software series at any point of time. If you are opting for complete project finance software series, then CMA data will get prepared all on its own and it will not require any of the data input from your side. As related to software, for any further clarification, explanation, service or support, you may call us, WhatsApp us or email us at any time. You may also visit our website as A. anandisoftwares.in, B. projectfinancesoftware.in, C. cmadatasoftware.in. Thanks and regards from Anandi Softwares.